Okay, so we're diving deep today into all the market craziness from those tariffs the president announced.
Yeah,
Everyone's feeling a little uncertain right now, probably seeing some red numbers.
for sure.
And we're going to see if this whole downturn is actually an opportunity, for the long haul.
Yeah.
We've got some fresh analysis from the Motley Fool. It came out just today, April 4th, 2025.
Wow.
And they think maybe Amazon and Wells Fargo are looking kind of cheap right now.
Interesting.
So
Yeah.
we'll see what they have to say about that.
Yeah, the markets are definitely jumpy right now. The president's tariff news has got everybody spooked.
Yeah.
The S&P 500, it's officially, in correction territory.
Yeah.
And the NASDAQ is getting close to a bear market.
Yeah.
So, a lot of people are probably thinking about pulling back.
Right.
But this article we're looking at, they're saying maybe that's not the best move.
Right.
Maybe smart investors can find some real bargains, in all this chaos.
Yeah. Take advantage of the fear.
Exactly.
That's always the play, right?
Right.
Be greedy when others are fearful.
Yeah, and that's why they're looking at these two companies.
Right.
Amazon and Wells Fargo, they're very different.
Yeah.
But
Let's start with Amazon.
Okay.
The big kahuna of e-commerce and cloud computing.
Right.
And as of today, this massive company, $1.8 trillion market cap.
Yeah.
Their stock's down almost 30% in the last couple months.
Wow.
And today it dropped another almost 4%.
Oh.
Closing at 171.41.
Yeah.
But now Amazon doesn't, directly make stuff that would be hit by these tariffs.
Right.
So why is the stock getting hammered?
Well, that's a good question. The article points out, their marketplace,
Yeah.
their huge marketplace, that's their strength, but it's also their weakness in this kind of situation.
I see.
Because a lot of the stuff they sell is imported.
Right.
So it's not even about the tariffs directly on those goods. It's more about like the whole economy. The uncertainty hurts consumer confidence.
Yeah, people are nervous.
Exactly. And when people get nervous, they don't spend as much.
Right.
And that hits Amazon right in the gut.
Right. Their whole business model.
Exactly. And the article even mentions, the R word.
Recession?
Yeah, if we go into a recession,
Right.
then Amazon's really going to feel it.
Yeah, but they're still saying that Amazon has good long-term potential.
Yeah, they are.
What's making them so optimistic?
Well, first of all, they point out that Amazon is still growing,
Right.
even with, everybody tightening their belts.
Right.
They beat revenue expectations last quarter. Holiday quarter.
Yeah.
Grew 10% year over year.
That's not bad.
Not bad at all.
Especially in this environment.
Exactly. And then there's AWS, Amazon Web Services, the cloud computing division.
Right. Everybody talks about that.
And for good reason, it grew 19% last quarter.
Wow.
And that's a lot more profitable than their e-commerce business.
Right.
So it's like a really solid profit engine for them.
Yeah, AWS is like the crown jewel
Absolutely.
of Amazon.
Yeah.
And it's not just about the revenue, right?
Right.
The Motley Fool's also talking about how Amazon's getting more efficient.
Yeah. That's a big part of their argument.
What's the story there?
Their operating income jumped a whopping 61% last quarter.
61%.
Yeah, year over year.
Wow.
And revenue only grew 10%.
So they're getting a lot more profit
Exactly.
out of every dollar.
Yeah, their CEO, Andy Jassy, he's been streamlining things, making them more profitable,
Yeah.
and it seems to be working.
But even if sales slow down a little,
Right.
they can still make more money.
Exactly.
That's it's pretty impressive.
Yeah.
So what about the big picture? The long-term markets that Amazon's in.
Well, the article points out a couple of really interesting things.
Okay.
First of all, e-commerce.
Yeah.
It's huge, but it's still only about 15% of all retail sales in the U.S.
Really?
Yeah, so there's a lot of room for growth.
Right.
As more and more people shop online. And then the cloud computing market. That's where AWS is king.
Right.
That market is projected to quadruple in size.
Quadruple.
Yeah, by 2032 compared to 2024.
That's a huge opportunity.
Absolutely massive.
And AWS is in a great position.
Oh, yeah, they're the leader.
To take advantage of that.
Yeah.
So how does the Motley Fool think about Amazon's valuation then?
Well, they say Amazon's PE ratio is the lowest it's ever been.
Okay, and remind me, what's PE again?
So PE, It's price to earnings.
Right.
It's basically how much you're paying for every dollar of the company's earnings.
Okay.
So a lower PE
Yeah.
can mean the stock is a bargain.
I see.
So they're saying you've got this dominant company in this huge growing market, so getting more efficient, and the stock is cheap.
So it sounds like they're saying, there's some short-term uncertainty with the tariffs, but if you're in it for the long haul,
right,
this could be a good time to buy Amazon.
Exactly.
Okay, so that's Amazon.
Yeah.
Now let's talk about Wells Fargo.
Okay.
This one's a little different.
Yeah.
Wells Fargo is a big U.S. bank.
Right.
Mostly focused on, consumers and stuff here in the U.S.
Yeah, Main Street banking.
Right.
Yeah.
But their stock also got hit today.
Mm-hmm.
It's down over 7%.
Yeah.
Closing at 60.90.
Yeah, it's down 25% from its highs this year.
Ouch.
Yeah.
So what's the connection here?
Right.
With tariffs.
Yeah, it's not as direct as Amazon.
Right.
But the article says, banks like Wells Fargo, they're kind of like a canary in the coal mine for the U.S. economy.
I see.
Because if the economy goes south, banks are going to feel it.
Right.
And the article quotes some top economists who are worried that these tariffs are going to, cause problems.
Right.
They could make things more expensive for businesses, which means higher prices for consumers.
Inflation.
Right. And then international trade could slow down.
Right.
All of that could lead to slower economic growth or even a recession.
Yeah. And that's bad news for everyone.
Especially banks.
Especially banks, right?
Yeah.
So how could tariffs specifically hurt a bank like Wells Fargo?
Okay, so a couple of ways.
Yeah.
First, if we have a recession or if inflation gets really bad, people are going to have less money to spend.
Right.
They're going to be less likely to take out loans.
Yeah.
Like mortgages, auto loans, credit cards.
Right. All the bread and butter for Wells Fargo.
Exactly.
Yeah.
And then the other thing, even scarier for banks, is that people might start defaulting on their loans.
Right. They can't make their payments.
Yeah. If the economy's bad, people lose their jobs.
Yeah.
They fall behind on their bills.
Right.
And that hurts Wells Fargo's profits.
Yeah.
So it's like a domino effect.
Right.
Tariffs to the economy, to consumers, to the banks.
Yeah.
Makes sense.
Yeah. So it's not the tariffs directly. It's the ripple effect.
Exactly.
Okay, but the Motley Fool's still saying Wells Fargo is a good long-term bet.
They are.
Why is that?
Well, they point out that Wells Fargo is a really strong bank.
Okay.
They've got a lot of capital.
What does that mean, capital?
It means they've got a lot of money in reserve.
Okay.
So they can handle some losses.
I see.
If the economy goes bad.
Like a cushion.
Yeah, exactly.
Right.
And then they also mentioned something interesting about interest rates.
Okay.
So if the economy does tank,
the
Federal Reserve might cut interest rates.
Right, to try and stimulate the economy.
Exactly. And that could actually be good for Wells Fargo.
How so?
Well, it could boost their net interest margin.
Okay, and remind me, what is net interest margin?
That's the difference between the interest they earn on loans
right.
and the interest they pay on deposits.
Okay.
So in some cases, lower rates can actually widen that gap.
So they make more money?
Yeah, potentially.
Right. Interesting.
Yeah, it's like a silver line.
In a bad economy.
Right.
Okay. Now what about their valuation?
Yeah, so Wells Fargo's forward PE ratio is only 10.5.
Okay, so that's pretty low.
Yeah, it suggests that the market is already pricing in some of the bad news.
The potential recession.
Exactly. So for long-term investors, this could be a good entry point.
If you believe they can weather the storm.
Right.
Okay, so basically they're saying Wells Fargo is a solid bank.
Yeah.
They can handle some tough times.
Right.
And they might even benefit from lower interest rates.
Yeah.
Plus the stock is relatively cheap.
Exactly.
Okay, so to sum it all up, the Motley Fool is saying that even with all this tariff drama, Amazon and Wells Fargo could be good long-term investments.
Yeah, that's their take.
But we got to remember, things can change.
Oh, absolutely.
The economy's unpredictable.
Yeah.
If the trade war gets worse, or if the economy tanks harder than expected.
Yeah. These stocks could go down even more.
Right.
But their main point is, if you're looking at the long term.
Right. These stocks are looking pretty good.
Yeah, undervalued.
Undervalued.
Yeah.
Okay, so that's the Motley Fool's take on Amazon and Wells Fargo.
Yeah, we just laid out their main arguments and their insights.
Yeah, so you can understand their viewpoint on the market and, what might happen in the future.
Exactly.
So what do you think?
This is making me think about my own portfolio.
Yeah.
What's my time horizon?
Right.
Am I in this for the long haul?
Yeah.
How much risk am I comfortable with?
Right.
Because the market could still be really volatile
Oh, yeah.
And then, these companies, Amazon and Wells Fargo, they're in very different industries. Yeah. E-commerce and cloud computing versus banking.
Yeah.
So I got to think about, which one makes more sense for me? Right. Which one fits into my overall strategy?
Yeah, it's a lot to think about.
It is.
But it's important.
Absolutely.
Thanks for listening, everybody.